Hey traders, Raghee here, and in this recap video we're going to go over the open from today. I'm going to talk about a few tools that I'm using to help traders, really to answer the questions traders ask most of me. Now most of you that have been watching the recap video for any length of time should be very familiar with a number of these free tools that I make available to members, and that is the clearing range trade setup. Now the other thing that I want to make everyone aware of is that we have a breach that occurred before 10 o'clock. It's one of my favorite breaches because what we have are the propulsion dots that allow us to take the 945. There are 3 breaches every day. Many of you are probably already familiar with this. 935, 945, and 10 o'clock. And so if I had the dots, I take the breach, and that was the first buy of the morning. Now, why would I focus on buys? Was I already bullish from the open? Absolutely. A good old-fashioned anchored volume weighted average price does the job. Now, volume weighted average price is one of those tools I think a lot of traders are familiar with. They're available on a number of platforms, but there's a few things that I want my volume weighted average price to be able to do. That's number one. I want to be able to plot multiple VWAPs on a chart. I want to be able to anchor the VWAP. I want to be able to plot a standard and maximum permissible deviation on my VWAP. I want to be able to turn that on and off. I mean, these are the things that I want on a VWAP. These are the tools that I develop for myself. These are the tools that I show and share with members. And so I want those things all available. But I also want for newer members the ability to shut these things off, because a lot of traders say, hey, Rog, in the beginning, I don't want to be inundated with that much information while I'm still sort of making my way through getting comfortable with the chart. So one of the things I realized is, how about we move some of that information down to an indicator that I've been calculating by hand for a really long time, and we call that the V-score. And this is just a way of understanding the mean, standard deviation 1, 2, and 3, and knowing when we've essentially gone too far from home and could be setting up for a snapback. And even when we get a snapback, how do we know that we can still hang on to the long position because we haven't, for example, reversed? Well, this is a terrific tool because 2 questions I get the most is, 1, Rog, how do we know to have directional bias? Well, the green grab candles helped. Being above the volume weighted average price helped. The propulsion dots helped. I mean, so there was plenty here visually that allowed us to take advantage of the bullishness. But the question is then, well, Rog, how do I know when to pay myself? Right? When do I think the market might have gone a little too far? And, when are we breaking through levels that I need to be very aware of, maybe paying myself at? When we get above, say, the second or head towards the third standard deviation, am I kind of on borrowed time? Right? Am I possibly exhausting? Even if it looks like the market's picking up steam. And so this is where a lot of times we have the trend that we can see on the chart that's based on price, and even other indicators that are calculated on price alone. But then there is also the trend that is confirmed by price plus volume. And it's this price plus volume. Let's just use a number sign for that. How many shares, how many lots, how many contracts. It's that share plus shares plus or price plus shares, lots, volume, right? That gives us a different kind of understanding of the trend. And so there's really 2 trends that are happening simultaneously on a chart, and that's what I've spent so much of my career decoding. And standard deviation does that really, really well. So notice here, as we start to get a little too far from home base, we can pay ourselves. I think to proactively pay ourselves is really important. But what if we wanted to stay in this market longer term? Notice we're still above the volume weighted average price. Notice we're still above what I call this white middle line, the mean home base. Is there justification to just put a trailing stop in this market and wait to see if we break down through this, we can get out, but let the market do what it's already doing? Pretty darn important. So with all that being said, this Wednesday, we're going to have a second presentation. This is not an encore, okay? Last Thursday, right before the vacation, we had a webinar that I did about big money flow. In fact, it's available on the Simpler Trading YouTube channel. You can go to simplertrading.com/flow to get that replay. In fact, I really encourage you guys to check it out. There's already something close to 3,000 views on that video, and the comments are amazing. But I'm going to do a second. Now, this is not an encore. This is part 2 of the conversation. And you can register for that at simplertrading.com/clarity. We're going to be doing this on the 24th at 7 p.m. Central, 8 p.m. Eastern. Part 2 of this conversation. So we're going to dive back into using a lot of these tools that I've just shown you for intraday, end of day, position trading, investing. How do you manage your portfolio by understanding. Let's go back to this idea of the 2 types of trends. So you can have a trend that's price, but you can also have a trend that's price plus volume, right? Lots, shares, contracts. Price versus price plus, and I think you need to use both, price and price plus volume. So check it out. I'll see you guys on Wednesday. And like I said, the feedback for the first one's been amazing. I can't wait for you guys to see what I've got cooked up for you for this second part 2 presentation. And I'll see you then.